Hello everyone, today I'm going to talk to you about RSI. Wilder developed it in 1978. I've read his book and I want to share some details that are not mentioned in his book or elsewhere in the world. Now, why is the RSI based on 14 days? Because trends are typically formed in 7, 9, and 13 structures, and 14 is used as the average. In the book, this is recommended to capture those trends, and it's used like this worldwide. However, some things need to be explained here. There are length values created by major trends. For example, from one point to another, we see a trend. When you set the RSI to 14 for Bitcoin, as you can see, it produces a very volatile structure. But you should use the length value from the start of the trend to where the rise occurs, which is around 400 bars. If you take the RSI, which is normally set to 14, the blue one, and adjust it to 400, here's what will happen. Let's remove the blue one. Now, when you look at the length of the RSI, you'll see that people often look for divergences, but when the correct length values are entered, there won't be any divergences. The RSI almost perfectly reflects the price action. During this trend, from one point to another, has the RSI truly reached the oversold zone? In other words, has the trend ended? You can identify the oversold and overbought points during a 400-day trend using this method. Let's move to a shorter time frame. For example, when looking at a 1-hour time frame. Let's take a look. Here we have a trend. Let's consider this a point where the cards are reshuffled. The price has risen and then fallen again. Now let's measure the length again. Let's take the value from here. How many bars? 294. Let's enter a value of 300 here. When you set it to 300, the RSI will move as shown below. As you can see, it follows the evolution by rising with the price. The oversold and overbought zones should be considered the points where the cards are reshuffled. So, if there's a bottom here, you need to measure from this bottom to this peak, then from that peak to the next bottom, and so on. You should approach RSI readings by measuring the values from dip to peak and peak to dip. You can leave the other indicators as they are. Keep the 14-period RSI. It will give you a general idea. But if you want to measure the real strength, you need to use it this way. Now, let's move on to a more important feature of the RSI that should be discussed. As you know, RSI defines overbought and oversold zones at 70 and 30 respectively. However, as the price moves, RSI sometimes changes by 5%, sometimes 10%, and sometimes 20%. So what happens when RSI moves from 30 to 40 or from 40 to 50? How much does RSI change from 50 to 70? This information is not in the RSI book. I haven't seen it mentioned anywhere in the world, nor can you find it in Tradingview's indicators. But when you use this system, you'll discover something. RSI moves by 10% here and it drops by 10% here, meaning there are quick drops. This shows how much RSI changes in percentage terms. For instance, here it changes by 20%. All of these are significant. Why? Because in daily charts, the things that initiate major trends are usually the 20% movements in RSI during overbought conditions. Let's look at a ref chart. Here we see an upward trend. There's a cross 20 down below. This means RSI has suddenly moved by 20%. This is very important. This opens and closes cycles. Now, we see a downward trend here and we see a structure that ends the downtrend. Let's check another asset. Wall Street Mehmet, one of my favorites recently. There's a cross 20 here. This opens and closes cycles. RSI has moved by 20%. The asset has entered a recession and started to drop. After the drop, it initiates an upward movement with the cross 20 signal. During this downtrend, people buy here, and buy here. What? Simply because of ignorance. You don't need to do that. As this price is correcting itself, the crosses appear first, meaning candles that move RSI by 10% appear. See, there are 10% candles here. The price is correcting itself by gradually making 10% RSI moves. In daily movements, you can also see how the price corrects itself this way. In this system, if you buy without seeing this correction in the price structure, you might have to wait through long periods of sideways price movement. This system works in every time frame. For example, if you look at a 1-hour chart, you can see it generating cross 10 signals. Look, there's an upward movement here. See, the candle that started the rise with cross 20 is here, and the fact that these candles cause liquidation is very important. After seeing this liquidation, you know that this is the starting point of a rise. The upward break of cross 20 is the point where you should enter a trade. Let's look at another asset. In the 1-hour time frame, it's also generating cross 20 signals. Look, there's an upward trend here too, and as you can see, cross 20 candles initiated the rise and stopped the fall here. The price has exited the downtrend and entered an upward trend. These locations are where trend reversals start, and they are the points where RSI moves by 20%. The price makes a reversal and enters a new trend. You won't find this information anywhere. No such information exists in the world. I'll leave the systems I've written for these codes at the end of this text. Anyone interested can access them on Tradingview.
Now let's talk about other benefits of RSI. How does the price move when it reaches the overbought and oversold zones, i.e. the 70 and 30 zones? Let's take a look at them. In original trends, i.e. major uptrends, RSI moves above 70 in a bouncing motion. Let's liquidate the RSI. As you can see, in these areas, RSI has moved above 70 and is moving there. In this case, you need to understand that this is a major trend, and at the start there's a long signal. After that, there are only short signals. You should draw lines between where RSI gives a long signal and where it gives a short signal, and check the magnitude of the upward movements. For instance, here it gave a long signal and later it gave a short signal. The distance between these long and short signals is very important for RSI. That's all I have to say about RSI for now. See you in the next article. Take care. Don't forget to follow my channel, share this video with your friends, and if you're interested in learning brand new systems, be sure to follow my Telegram and YouTube channels.